Let's break down the entire timeline and process to buy a home as a VA buyer, either active duty or veteran, on the Florida Panhandle. Let's get into it. Okay, so let's talk through the timeline, the process, the requirements of buying a home with a VA loan in the Florida Panhandle. There's lots of different little nuances. There's even some slight changes of who pays for what or who selects what, depending on whether we're talking Pensacola area MLS, we're talking, Eglin Hurlburt Whiting area MLS, or we're talking Tyndall area MLS. Those agents and MLSs tend to do things slightly differently. Of course, at the Military Home Team, we can help you in all three of those specific areas, which we serve that entire market, the military community from there to there. The Florida Panhandle is our specialty. The military community is our specialty. So we'll work through those. But this, in general, is how this process is going to work for you here on the Florida Panhandle. Now, the most important part is getting a military-friendly realtor or VA loan-friendly realtor. You don't have to be active duty. You can be a veteran to use a VA loan, of course. So we want you to make sure you've got someone in your corner who understands this whole process, who understands the difficulties of a PCS, who understands the intricacies of being military, being a veteran. All of our agents are veterans or spouses, and we've got all the partners you need to be successful in this transaction. If you have the right agent, the right lender, the right inspector, the right title, this home purchase is going to be super smooth versus a big box lender and unknown title agency and unknown agent, right? If you put all those together, yikes, it could be pretty bumpy, right? So we want to make this as smooth as possible. We do that by bringing the right partners to our team, because every single one of these transactions, we're working with a team to go from contract to closing. Now, very next step is going to be working with a lender to get a pre-approval letter. Now, we'll hook you up with a vetted, VA-friendly local lender who answers the phone you calls, can do a pre-approval letter on a weekend, and not only are they just as competitive as the big box companies you're thinking of, but they're responsive and they're creative. They think outside the box. Some lenders are going to go, all right, here's your rate, here's your payment, here's what you're pre-approved to. And they don't look at, oh, well, if you paid off this car, we can actually pre-approve you to more. Or here's some incentives we can use to reduce your rate. Or did you know we can actually cover your closing costs if you take a slightly higher rate? Like, they're going to figure out what your needs are, and then they're going to help coach you through the process and get you to where you need to be. All right? So we like those lenders. They're very responsive. They can educate you very well on the VA loan, and they can help you through that process. So by the way, you can use a VA loan more than once, and you can have more than one VA loan at the same time. Okay, so we're going to have some more content coming out on VA loans, specifically with some of our partner lenders. We're going to do some duo videos, so you'll be able to really understand that as well. So check out for that. But when we have that pre-approval letter, then we can start looking at properties, and we can start making offers. Right? So the home search begins. Now, there's a caveat there. We actually don't want to start too early with the VA loan. So here's what we recommend. I like this number because it's easy, but I have the math to back it up here. We recommend not offering on properties sooner than 100 days before your report no later than date, approximately. That's our target. Because of a stipulation, a guideline really around the VA loan called the 60-day intent to occupy. So what that means is that the VA does not want you to close on a home earlier than 60 days from when you would actually show up and live in it. Okay? Now again, with lending guidelines, there are guidelines. So depending on the lender, there could be some kind of creative thinking here, of course, right? Like, okay, your orders say report no later than this date. Some lenders are going to say, well, that's the date, 60 days, or else. When really, okay, what if you're actually able to come down earlier and your commander writes a letter saying, hey, so-and-so is authorized to move earlier. They will be moving earlier. Here it is. Hey, now we can buy a home slightly earlier. Or, hey, my spouse is going to be moving down with my family 30 days ahead of me. Okay, now we can look at homes earlier, right? So certainly it's not a hard rule on you and your report no later that your orders, right? So, but it does make sense, right? One thing to kind of keep in mind, and it's not exactly related, but orders can change. So I have had a client buy a house and his orders changed. And so he didn't actually PCS here, but we actually turned it into a cash flowing rental for him. So he's actually pretty stoked about that. But that can happen. And unfortunately, I can't fix that. So we really don't want to buy homes 3-4 months earlier. Now, one thing we can always do is turn it into a cash flowing rental. We can always sell it, though you may lose money on that transaction. So I would encourage you to just turn it into a rental for a while. I'm a real estate investor myself, so get very passionate about that. Happy to help you with that piece too. But 100 days, that's kind of our rough timeline of this is when we're now in the window from about 100 days from when you're going to show up. This is when we want to start really looking at homes and making offers. If you want to get into one that early, we don't have to start that early, but the timeline is going to take about 40 days. So for years now, that's basically been the VA purchase timeline in our market. Some lenders can do as little as 30 days. Some will say fewer. No, just no. Okay, we're not going to be able to get everything done in less than that, and the lender probably can't either. So 30 days minimum. I like to do 40 days to give us a little bit more wiggle room, but sometimes my loan officer partners will call me and say, hey, there's a couple of things we're working through. We're going to pay off this, that, the other to help bring their rate down. Give us 45 days. We can really make things super stellar for our buyer. And I'm like, yeah, let's make it stellar for our buyer. Let's go with 45 days. And in today's market, we can certainly work 45 days in on most homes. So that's our typical timeline. 40 days is about what we shoot for. Now, the beginning of when we go under contract, the first thing we're going to do is get our inspections done. So we've got 7 to 15 days to do that. Standard is 15 days. I like to leave it at that if possible. I like to do no less than 10 because we've got 2 inspections we've got to get done. A home inspection, which is everything you're kind of thinking of, and we're actually going to roll 2 insurance inspections into that, a wind mitigation and a 4 points. And so those are going to help reduce your insurance costs, which is very necessary in Florida. And a WDO inspection. That stands for wood destroying organism. They're basically looking for termite damage, but in reality, a lot of what you see is just wood rot because it's wet here. It's Florida. It stays humid and all the time. So if you have kind of untreated or unpainted exposed wood around the exterior of a property, which is literally like every home, even if you didn't know it, you got like a little corner of trim on a window or a door frame, that'll tend to rot. And that's what the WDO inspection will find. Or they will find termite damage if there is any, but more often than not, it's wood rot. The lender is going to require that be repaired prior to closing. So we have to get those 2 inspections done, plus those 2 insurance pieces we talked about. So we always roll those in with our home inspections. We don't wait for that because it's almost always a requirement to reduce your insurance costs. And it's cheaper to do it when it's rolled in with the home inspection earlier on. So always we do that. And then we'll conduct repairs and get a survey done as required or as dictated by contract. I say that for the repair side. The survey, if there's a recent one on file and things haven't changed, we can usually reuse that. If not, let's just expect we're going to need a survey, $500 or $600, and it's done. Now let's talk through repairs for a minute. They're really going to be dictated by the type of contract we select in Florida. There's 2 main contract types. There's the as-is and the standard contract. Now what's really confusing though is that what most people think of as a standard contract, we call the as-is, which is not Florida's standard. So I want to kind of break the mindset here. The namings don't really matter as much. Here's what happens. On the as-is contract, during the inspection period, the buyer can walk for basically any reason. We don't even have to. We could be like, that green is just not the right green for me. I don't like it. And we're walking, right? Like we shouldn't do that. We should hopefully have seen the property before and like it enough to respect the seller and not go under contract if we didn't like the green color that we could repaint, right? But that's just a silly example. But essentially, we have the ability to walk during the inspection period. We do an inspection, some big major finding we don't like, foundation problem, for example. I'm out, right? Even if the seller could repair it or would repair it, I don't want to handle that. I don't want to have to own that or disclose it later. I'm out. We could walk for that, right? So now you can request repairs with the as-is contract. It's not that, in the standard contract, we're going to set repair limits up front. So that's why I say that. We can request repairs after we do our inspection. However, because it's called an as-is, listing agents and kind of everybody in the seller is going to expect that if you find minor things, which you're going to find things with a home inspection, even on a new home, if you find things and they're minor, the listing agent and the seller are basically going to expect that you're going to accept those issues. So let's say, for example, this outlet needs to be a GFI outlet. You may say that's a safety thing. You may say it's minor. The seller might see that as minor, or the polarity is reversed in an outlet. That's a better example. Or this window is missing caulk around the edge, or this piece of trim on the door is broke, or there's a settling crack in this piece of drywall right here, right? All those would be minor findings, most likely. And so the seller's going to expect that you're going to accept those. Now, if the list has 40 things on it, or something major is found, like the HVAC is broke, the roof absolutely needs to be replaced, it's leaking, right? Now we're going to come back to the drawing table and go, whoa. Either we're going to walk or we need to renegotiate because we didn't, we expected this property to be in good repair and not have a lot of issues, and it turns out it has a lot of issues. So in that case, if the HVAC is totally bad, we can usually get that repaired or replaced. Or if there's a laundry list of small items, what I usually recommend is, the seller's really not going to want to go repair 40 things. They got to call a bunch of different contractors or get an expensive handyman in there, and, it becomes a whole process. It could extend this timeline for a long time, depending on contractor availability. What we usually recommend if we're in an as-is contract is getting money towards closing. Say, hey, there's a bunch of small findings, a lot more than we expected. Mr. Seller, would you mind throwing $1,500 towards closing costs? And we'll make those repairs after closing. Well, shoot, you could replace a couple outlets for way less than $1,500, but now you can bring $1,500 less to the closing table, cash to close, and you can make those repairs after closing. I like that for another reason, because now you know that they're done the way you want it, whether you hire the right contractor or whether you do it yourself. Okay, if less up to the sellers to do it, hopefully nobody's going to do anything shady, but you don't really know necessarily, right? We're going to try and make sure that the repairs are done, but the quality of which none of us can really verify, right? Okay. On the standard contract, though, the seller sets the repair limits. I'm sorry, that's a typo. The buyer sets the repair limits up front. So, hold on, let me rephrase that. The seller repair limits are set up front. Sorry. So essentially, when we write this contract and we present it to the seller, it's going to say, Mr. Seller, I expect you to make $500 of repairs, standard repairs, $500 of WDO repairs, and $500 of VA repairs if they come up. And if repairs come up and I request them and they're under those dollar amounts, you're going to do them. Period. Dot. Right? So that's what's going to happen in that scenario. And the seller's going to have to make those repairs up to those limits. Now, if it's above those limits, now we got to go back to the drawing board and negotiate. The seller could decide, though, that if it's above those limits, they're going to go make those repairs. Let's use the foundation again. Let's say the foundation is cracked and the house needs to be raised on one side, which might cost $10,000 to correct that. The seller could say, I'm just going to go ahead and make all those repairs. You requested all these minor things and that foundation issue. I'm going to do it. Now, you as the buyer, you're getting everything you wanted. You wanted those small repairs. You want that big repair. Boom, sweet. You're getting everything you wanted. But if you decide like, hey, there's a foundation issue, I'm going to have to disclose that later, and I really don't want that, you can't really walk. So that's kind of the thing. With the standard contract, if sellers are up and game for making the repairs, even if they're above and beyond the repair limit, then you can't be like, you know what, nah, I know you just spent $40,000 on repairs for me, but I want out. If you walk at that point, you lose your earnest money. Earnest money, and I should have put this on here, is 1% of the contract amount, generally. So if the home is for $300,000, your earnest money deposit is going to be $3,000. And so that's the money you're going to put down after we've submitted the contract and gotten it signed. You'll send that to the title agency, and they'll hold on to it as kind of collateral for the transaction. So if you walk for something other than allowable by the contract, then the seller would potentially keep that money. But if we go through the whole transaction and you do everything that you're supposed to do, and we go to closing, that money gets applied towards your closing costs. Of course, it's still your money. Or if the seller breaks contract for any reason, then you would get that back. Or if we mutually decide to cancel, you would get that back. Okay? Wish I put that on here, but too little too late. So let's talk financing. So while this is all happening, from day one, when we get under contract, we're going to send that contract to the lender, and they're going to start the financing process. They're immediately going to request a number of documents be signed, initial disclosures, draft disclosures, and they're going to send you request documentation from you to verify your income and your credit and your debts and all those kind of things. And the standard financing period for both these types of contracts, and this includes the appraisal in Florida, it's kind of all rolled into one unless we decide to not to forego the appraisal contingency, but it's all built into one otherwise. 30 days. It's rarely shorter. So that's generally what we have. And in that timeline, we usually kind of wait just a little bit to order the appraisal, see how the inspection goes, depending on the property. And if it doesn't look like, we expect to have a lot of inspection issues, then we may decide to just order the appraisal right up front because we think it's going to show well on an inspection. And so the appraisal will happen. It's a VA appraisal. Now, here's the weird thing about VA loans. The VA appraiser can require repairs. So unlike a conventional or unlike cash or other loan types, the VA appraiser can require repairs. And this is a little weird. The seller must complete those repairs. We cannot touch them as the buyer side. And so that's why I have this little bullet up here. Regardless of the contract type, we're going to have a separate addendum for the VA. And the VA addendum is going to say, seller shall make any repairs that the VA appraiser points out and requires for the loan up to a certain amount. So we're going to set that already, and that's all going to be built in because everybody knows the VA appraiser says, hey, this outlet needs to be repaired, or this there's wood rot that needs replaced, or those are the most common ones, or this window is fogged. That's a common one that needs to be replaced. Then the seller's got to do that. So we usually set either a set amount, or we say loan stopping repairs, like a kind of nebulous term that basically says, seller, you got to do it. Just about every single time we're covered by that. The only thing that could happen, though, is if the appraisal kind of happens late, like they were happening when everybody was refinancing to lower rates, it was hard to get appraisals done. If it somehow happened late, and at the last minute they require another repair, now we're going to have to figure out how to extend this timeline. Now, in that case, it's not really anybody's fault usually, so we can usually get the seller to kind of wiggle with us and extend the contract time, the closing date out so that we can get those repairs done. You want those repairs done, and they have to be done to close. So it's in everyone's best interest to extend and make that happen. All right, so let's talk buyer responsibilities. To get through all of this stuff to the kind of deadlines we're going to see, or the milestones we're going to see at the end here, there's a number of responsibilities you have as a buyer. And remember, when you sign a contract, it actually lays out some of your responsibilities in there. You're required by contract to do some of these things. So I just want to make that a clear reminder. It's not anybody else's job in the transaction to make sure you sign your loan paperwork as required or get vetted for that loan. It's your job. And you and the lender got to figure that piece out. So happy to help in any way we can, right? But you're obligated to do some of these things, like wire earnest money in a timely manner, as well as wire the rest of the cash to close. You've got to review the inspection reports. We also recommend you look through any HOA or condo documents. I can't interpret those for you. I'm not a legal professional, but I highly recommend you look through those so you kind of know at least what you're getting into. We could recommend folks who can review those with you if you would like. request repairs. So we'll work through that with you, of course, as your agent, and talk about what we think should or shouldn't be done, or what we can ask for, closing concessions instead, those kind of things. Must be allowed by the contract, essentially, or it's an as-is, and then we'll decide what we're going to request. You need to be prompt with all requests, lender, agent, title requests. I've had buyers like wait on signing certain things and then, wonder why we can't get it done within 30 days. Well, you didn't sign anything for a week. You made our lives really hard. You said you didn't want to sign digitally, right? And now you're screaming at us saying, why can't you get it done? And now I have to rush an appraisal. Well, you got to be prompt with all requests. And that is required by contract. So, it's super important. It's just important so that we can keep marching towards the closing date. Get insurance. Of course, you've got to do that. We'll recommend insurance providers. We'll get additional inspections done to help reduce that rate. Set your utilities to turn on after your closing date. Sign any disclosures or any other documents that come your way. And then, of course, attend or arrange closing. Now, I say be accommodating because sometimes I'll get buyers that will, our team will have buyers that say, hey, I'm working from 5 a.m. to 10 p.m. on closing day, and I really can't do anything unless there's a mobile notary that can drive on base and meet me at my office in the skiff. And you're like, it's your closing. Like, don't you want to do whatever's possible to make that happen? Normally if you talk to your boss, they'll be accommodating because it's a closing on your house. It's your next assignment. So we just ask that you also be accommodating with us. It's not up to me as the agent necessarily how the closing will happen. We're going to talk about the different ways we can close here in a minute. But please be flexible, be accommodating. Apologize up front if somehow things don't end up in the timeline right where we need it. A pop-up repair last minute, or something happens at title, or the seller needs something, and closing dates can slip, or they can move up. Sometimes we can close early. So it kind of depends, right? So we want to just be as flexible as possible and all kind of keep that in mind. Now, let me kind of shrink my big old head here. Now, when we've done all those requirements and we get along here, we get the appraisal done and the underwriter's happy, you're going to get a clear to close. Woohoo! So that's the lender saying, good to fund this loan. We're happy with it. We're clear to close. We're going to send our numbers over to title. Now, title can issue the closing disclosure. So now they've got everything they need. They can send the closing disclosure to you, and you now have 3 days, have to have that in hand, legal requirement, before closing. So as long as we've got that 3 days before closing, we're good to go. It usually is not a problem. It happens every now and then. We've got to make an extension, but usually we're good to go on all these timelines. So boom, we got our closing disclosure, and now it's closing day. So on closing day, we've got a number of different ways we can close. So of course, we'll figure all this out ahead of time, so we're not all shocked at the plan. But if you're local, easy peasy, let's do that. Florida is not a state where you have to show up at the closing table with the buyers and sellers and stare at each other across the table. We don't have any of those shenanigans. You can close from afar. That's cool. If you do close from afar, let's say you are not going to be moved down here yet. You're going to be at your current U.S. Duty assignment. Mobile notary is going to be the best option for you. I know there's a base notary, and it's free, and I've done it too. But the thing is, they're not necessarily going to know every spot that needs a signature and a notarization. Hopefully it's clear, but it's not always. They don't know how to interpret that contract from a different state. You've still got to go get it all scanned and overnight mailed back. With a mobile notary, they come to you, except for maybe on base. So you might have to come outside the gate. They come to you. They've got all the paperwork. You sign all there. They know exactly what to sign, what to notarize, how to put the dates exactly right. They go scan it. They go mail it. And then your loan will fund as soon as the paperwork gets back overnight the next day. So it's not fully closed. The transaction is not fully closed until the loan funds, which is when the hard copy paper is received. But in order to kind of get that closing wrapped up on that day, they still need the digital version of it. So that's why you got to do both. With a mobile notary, they handle all that and they come to you. Totally worth it. Totally worth it. Now, and the title company will usually arrange that for you. So it's not like you've got to go figure it out. In most cases. And then this one's important. If you're overseas, Here's how we normally do it. We do a power of attorney. So you've got a stateside relative that you deliver you go get a power of attorney written, notarized ahead of time, mailed to the title company, and now someone else can sign the paperwork on your behalf. You can still review it all and whatnot a couple days beforehand, make sure you're happy with everything, talk with the title agents and loan officers and your agent to make sure everything is still right. And then if you're happy, cool, tell your family member and they'll sign for you. The reason being, takes days to get that paperwork mailed over. So the contract's not really going to close. It's not going to be fully closed until that paperwork is received. And if it's lost, oof, now we got to start over. Got to do it again. Keep in mind, you still have these same issues. Usually overseas, you're not going to have mobile notaries. So you're still going to have to go get it notarized at the base office. You're going to have to mail away. You're going to have to scan all yourself. So it is far less of a headache, and everyone prefers power of attorney option for an overseas closing. Okay, 25 minutes. I know that was long. Let me kind of reduce the text on here. Hopefully this helps you kind of get a vision for how this process works, the timeline, all the different things going on. Now your agent is going to be aware of all these timelines and handle a lot of this stuff, tell you what you need to do, as well as your lender's going to help with that. The title agency is going to help with that. So there's a lot of little requirements in there, but our job as the military home team is to solve the problems and get you into a home. We've never failed to get a buyer into a home. So we want to make sure that should you choose to buy, we get you the best home for the best price with the best rate. And we look forward to working with you. If you'd like to work with our team for your housing needs, be sure to hit that QR code. Reach out to us in any way you like, whether that's Facebook, filling out the survey, our client questionnaire on the QR code, hitting my email address, whatever way is best for you. If you got some value out of this video, please subscribe, please like it for us, and we'll see you soon.